Hello and welcome everybody. I'm Stephen. I'm a popular investor on eToro. Thanks very much for listening to my video today. And as usual, don't forget to like this video and subscribe to my channel. That will be awesome. So to get started, I'm going to do a presentation today. Again, I'm going to explain what happened in the markets last week. And I'm also going to be talking a little bit more about how I maneuvered the market and some of my strategy. So just before I get on to our results from last week, I just want to say that I was lucky enough to be invited to a podcast episode last week by 𝘃𝗶𝗱𝗲𝗀𝗃, in which we talked about many aspects of the market. And I think that will be a very interesting listen for you if you want to know my viewpoints on the overall market and what's happening overall in the macroeconomic environment. So please check out 𝘃𝗶𝗱𝗲𝗀𝗃's channel, and you can see that interview. We talk probably the first half about traditional markets, and then the second half is more about crypto and talking about has crypto bottomed and some other really interesting aspects. So please check that out. You can see the video linked in my feed. So as we talk about what happened in the markets last week, our portfolio performance was at about minus 1.59% down. If we look at that, it doesn't look too pretty at first glance. However, if we compare that to the last week's benchmarks against other indices, we can see that the Nasdaq was down about 4.2% and the S&P 500 was down about 3.3%, and even the FTSE 100 was down about 1.7%. So our portfolio did hold up pretty well if we compare that to the rest of the markets. Last week, it was a poor week for the US and the European and the Chinese market. So it was a pretty tough week. However, crypto stayed flat, specifically Bitcoin, but we did see some good rises from some of the DeFi type protocols. Ethereum did well, Cardano did well, and a few others. I also did lots of short-term trades last week, which helped the portfolio both long and short, as I usually do, to try to mitigate some of the effects of volatility on the portfolio. So we did some short-term trades in ProPetro, carbon emissions, which I've been liking to trade recently, oil, silver, Okta, Tesla, which was a short trade, and also Xerox, which was a short trade as well. And that is just to name a few. There was quite a lot of those short-term trades, which helped our portfolio last week. As I mentioned in my video last week, I was planning on closing Micro Focus, and that is because they were subject of a large-scale takeover from a Canadian company, and I thought it was best to close that off. So I did officially close that long-term position of last week, and I'm going to use some of those funds for future opportunities. So if we talk about the kind of main news from last week, well, it's still very much dominated by that speech a couple of weeks ago from Jerome Powell at the Jackson Hole meeting, which he said that the Fed were going to continue to increase rates as much as possible, really, in order to be able to reduce some of that inflation that we've been having, and they're really hoping that inflation has peaked, but they want to see a continued period of positive data, which suggests that. So it basically shows that no Fed pivot is on the horizon to kind of slow down or stall those rates. As I've said so many times, but I really expect that they're going to continue to increase those rates, probably at a 0.75% rate increase at the next meeting. And they're going to continue on that course or a similar course for the next couple of months at least. So I don't expect that those rates are going to stop, or there's going to be a pivot anytime soon. However, as soon as there is a smell in the market that either something starts to break and that we could be in for a big recession, for example, then I do think that they will start to pivot. But I still think that there'll be a good few more months of rate increases before that happens. You can find out a bit more about my general views on that in the podcast episode I did last week with 𝘃𝗶𝗀𝗃𝗀𝗀𝗀. We also saw oil prices. They dropped below $90 a barrel last week. Again, a lot of that is to do with potentially a lower demand for oil if we do dip into a recession. Also, there's continued talks with OPEC about increasing production, for example, which would increase the supply. We also saw some data from the US last week in which said that they've added 315,000 jobs last month. However, the unemployment rate did rise to the upside, and that was from 3.7 from 3.5 in the previous month in July. So we are seeing a slight increase of the unemployment rate. However, a lot of that could be labor participation. We've also seen this tug of war between Russia and Europe in terms of oil and gas. And last week, it was announced again, the Nordstream 1 pipeline was just about to be reopened. However, it was announced later on in the week that the maintenance would be extended. And really what this is a tug of war between the powers of Russia and Europe. And what Russia are really expecting is they're expecting to use the leverage that they have on natural gas, especially going into the winter period where Europe requires more and more of it, in order to use their power to try to get rid of some of those sanctions that are already in place. So I think that's going to be a really long process. However, we must know that Russia are also quite dependent on the economic means that it gives them when they're selling natural gas to Europe. So it is expected that they will reopen that, but there will be some leverage that they will try to put in place. Also, markets are also pricing in a potential of a 0.75% interest rates for the European Central Bank at the next meeting. Generally, in Europe, they've been doing the interest rate rises more slowly. We started off at about 0.25 and then went to 0.5. And it is expected they will increase those because they are quite far behind what they are in the US, and inflation is continuing to peak. It is my opinion that in Europe, inflation will peak much later than it has in the US. I actually believe that inflation has peaked in the US, but I think it will be quite a long time before that peaks in Europe. And that is mainly, again, because of that dependence on energy and other commodities that Europe has for Russia. We've also seen the UK pound, and it's fell to one of its lowest levels against the US dollar. And we've also seen that in other currencies such as the euro and many other currencies. Basically, the US dollar is very strong at the moment, and it's kind of a flight to safety. Many people are putting US dollars on the sidelines in order to be able to deploy more investments at a later period. So that'll be interesting to watch, and I think for the next kind of couple of months that the US dollar will continue to be extremely strong compared to with other currencies. If we look at inflation in the Eurozone, that has accelerated, as I mentioned. I think it will peak later. And now it's at a record of 9.1% in August, and that's up from 8.9% in July. So as we can see, that is still continuing to increase. And in China, the markets were particularly bad last week, and that is because they are ramping up the strict COVID controls that are in place. There's been a real uptrend in the number of COVID cases, especially kind of in that south part of China, kind of Shenzhen, Guangzhou, around that area. And that is where a lot of the manufacturing takes place in China, which is exported around the world. So I think we could see again a few more supply chain bottlenecks and some manufacturing weakness in China over the next kind of month or so. Also, I mentioned a few months ago that an agreement was put in place between China and the US in order to allow some of these kind of Western audit firms to be able to audit Chinese companies. And China had been fighting this before because they said that the US wanted to try and take their secrets, etc. However, that was agreed a few months ago, but now some of these audits are starting to take place. And they're starting to be implemented and go ahead. So this is a good sign. And there was a lot of rumors that some Chinese companies could be obviously taken off delisted from the NASDAQ, for example. However, it's much less likely if they allow audits to happen, which is one of the US demands. As we look at the top 3 performing stocks of last week, and the top performing stock for last week in our portfolio was Bausch Health. Bausch Health has been suffering a lot in this recent climate, and a lot of that is to do with the amount of debt that they have and those rising interest rates. However, it was up about 24.52% last week, and that is mainly because they have managed to strike agreements with banks to let the debt mature much later. So a lot of that debt that was maturing in 2028, for example, has been pushed out to 2030. So there's a lot more hope that they can manage that debt moving forward. The second best performing stock of last week is Thyssen Krupp. And that is because they won a very large ammonia project in Qatar, which was awarded last week. And so Thyssen Krupp was up about 7.82%. So that's very good overall for that stock. And the third best performing stock in our portfolios was Marstons, which is basically a pub holding company. And they were up about 5.82%. If we move on to our Death by Charts series, I thought that these charts were very interesting. So what you can see is that on the left chart, this is the Fed balance sheet, basically over the years. And as you can see at the kind of beginning of the year, we kind of saw a peak around about April. And from that peak of the US balance sheet, it's actually come down about 139 billion from its April peak. However, it has come down very, very slowly. If we look at that right kind of chart, we will see that for the majority of years from 2002 to 2022, we've seen an expansion of the US federal balance sheets. However, with just a few years there where the balance sheet was shrunk, but we are expecting that balance sheet to continue to shrink, albeit very slowly over the next couple of months. So they have a long way really to go to make any fundamental difference to the balance sheet. If we look at this next chart, if we look at the market expectations for the Fed's funds rates, and that is from August 22 to January 2025, I think that they are expecting the federal funds rate to kind of peak at about 3.94% in February 2023, and that's what the market is expecting. My personal opinion is I think it will go a little bit higher. I'd expect that to go from somewhere between 4 and 6%, as I have mentioned in the podcast that I did last week. However, that will be driven entirely by the data that's released in terms of inflation and some other areas, employment as well. If we look at the US dollar index, it's actually up over 54% from the low, which was in April 2008, and this is at now, the US dollar is at the highest figure that it has been since 2002. So we're really at kind of really historic highs for the US dollar, and as I expect that to continue for at least the next month or two. As we move on to crypto now, and I'm going to be giving you some of my crypto news and views. Bitcoin held very steady last week, and it's remaining at about that $20,000 mark. It's kind of moving between 19 to kind of 21,000, but it's at about 20,000 at the moment. So it's quite a flat week altogether for Bitcoin. However, Ethereum has continued to be very strong, leading up to that merge, the Ethereum merge, which is expected to happen in a couple of weeks. And it rose over 6% last week. We've also seen a lot of strength last week from other kind of DeFi or other layer one protocols. So Cardano was up quite heavily last week, and also a few other protocols as well. So we are seeing some strength there from some of the altcoins, but generally we are kind of in a risk off environment soon. I'll go into a few bits of on-chain data in a moment, which will explain some of my views on where we are in the cycle. We also saw Ethereum Classics at ETC hit an all-time high hash rate, and that is primarily because a lot of the Ethereum miners pre-merge are starting to move over to the Ethereum Classic blockchain. And so we're seeing quite high hash rate. Also expected that there's going to be a few different forks, and that can also explain why the Ethereum price is up, because people want to get positioned in positions in order to be able to claim some of those forks. Also, Michael Saylor has been sued for tax evasion. This is basically come about because Washington, D.C. say that he hasn't paid his municipal tax in Washington, D.C. for some of the work that he did there. However, he is obviously arguing very differently. So we will see how that plays out, but it's not expected to have any material impact on him as a person in terms of his funds or the Bitcoin holdings that MicroStrategy has. We've also seen LG Electronics, which is the big South Korean technology company, and they are planning to launch an NFT platform with Hedera on the Hedera Hashgraph protocol. So that's pretty interesting. We do have some Hedera Hashgraph within our portfolio, and it is something that I'm quite bullish on kind of long term. There was also been a proposal to migrate Helium, the Helium protocol, to the Solana network. And that is just a submission at the moment, something that's being considered, a proposal. And that is mainly because the Solana protocol is an extremely fast protocol with kind of very low fees. And I, again, am very positive on the long-term future of Solana. And I mentioned that in the podcast that I did last week, and I go into some of the more in-depth reasons on why I like Solana. So if we look at some of the Bitcoin charts and some of the on-chain metrics, the chart to the left is hodl waves. And I thought that this was quite interesting to show. And this really shows quite a tight supply of Bitcoin. So it says that only 6% of the supply of Bitcoin has moved in the last 30 days or so. This shows that it's a very tight supply of Bitcoin at the moment. And this sometimes can be a precursor to an increase in the price of Bitcoin, because there is less available supply on the market, and this squeezes the price up. However, as I've mentioned in past videos, although we could see a nice bounce back in the overall Bitcoin and in the crypto markets, I'm not expecting us to go parabolic anytime soon. But I think that we could see a nice kind of range in Bitcoin between kind of 20,000 to kind of 40,000 over the next year or so. So there is still some nice upside potential, even if we do continue to range. The chart to the right, which I think is very interesting as well and is very bullish overall for the crypto market, and this is the Bitcoin, what is known as the Bitcoin hash ribbon. So basically this is the hash rate on the Bitcoin network, and it's generally seen as a very positive sign when the 30-day moving average and the 60-day moving average they cross over. And as you can see from this chart, we have recently just had a crossover where the 30-day moving average has gone above the 60-day moving average. And this is generally seen as a very good thing. And it shows that kind of minor capitulation has already taken place. So it's very positive. So thanks very much for your patience with the portfolio. I really appreciate all of you. I know that it's been a very difficult 2022. I think it's very important that you stay patient during these times. I think you're going to see a lot of kind of newspaper articles, etc., which spell doom and gloom. And although it is a very difficult time for the economy as a whole, I think if you look at the test of time over multiple decades, I think it's very important that not only we add to our positions as prices go down, positions that we strongly believe in, and that in the future that the portfolio will turn around, and we will be really grateful that we did kind of add to those positions and that we did stay patient. I think that this is a time in the market where people start to get itchy feet and they think, this has been happening for far too long, I'm going to get out. And it's usually at that point where you most regret it, because that is where you kind of see these capitulation of investors, and then they come back in much later at a much higher price, and they are not able to realize those gains that they should have by just holding on. So also please join my Discord group if you haven't already. Really awesome community of people there. We regularly talk, we have great conversations. So if you haven't already, join that group, and I think you can learn a lot from that group, and you can also ask me any questions that you might have. So thank you very much for listening to this video today, and have a good week ahead.